Today, markets are facing a lot of headwinds due to rising commodity prices, which in turn is leading to a lot of hike in inflation. And to curb this, RBI has resorted to hike interest rates so that inflation eases. This dynamic has raised a lot of question marks pertaining to earnings growth. That's the reason we are seeing that people are not having confidence to go out in market and buy frontliners or mid-cap stocks. People are bearish and there's a lot of pessimism in the market. But the scenario in derivative stats is not reflecting so. In fact, the picture is quite different over there. Despite market correcting from higher levels, we have seen implied volatility, which is measured to gauge that what kind of volatility people are expecting going ahead, is quite low. It's somewhere around 18 to 19%, which clearly reflects that though people are bearish, they are not taking corresponding trades. We are heading towards rollover week. Expect volatility, but this volatility should not, disturb the range which we have seen. 5,400, not just two times but many, has seen holding and providing good support to the market, and we have seen consistent bounce back from those levels. So we are not expecting major drop down from those levels, at least for next 4 sessions which is left in this expiry. At the same time, from current levels, we are not expecting very big upside, but if we move above 5,500, you might see some kind of short covering, and above the strong resistance which has been throughout this expiry. If you just remove, the first week of May, 5650 has been very strong resistance zone. So if at all we go above those levels, then we might see a spurt of short covering, which is again unlikely. So overall, if you remove first week of May, we are still in a range. What we are advising, that despite so much of concerns in market, if market is not going down and you are seeing rising volumes in upgoing market and falling volume in falling market, this certainly doesn't encourage us to short this market. So our advice is not to short. In fact, if you are having a view on the lower side and you are thinking of going long, then you should buy call options, at the money call options, because it's very cheap in terms of implied volatility. So going ahead, if not May, then June call options, at the money call options are advisable to buy and trade with positive bias in this market. And more than index, we would suggest be stock specific. In index, we would also like to comment on Bank Nifty, where there are a lot of short positions standing, and if we see Bank Nifty going above 11,000 levels, then there might be a spurt of short covering again in that particular index.